Hey traders, welcome back to my channel. Today we are looking at US30 again. So we're going to actually look at day trading this index today and just a few tips really that I have for doing that. The last video I did on US30, I spoke about more swing trading than day trading / scalping. So this will be a little bit of a different take, but of course we're going to use the same basic techniques here. So if you wouldn't mind, please subscribe to my channel. Let me know what you guys want to be seeing, what you want to see next. I always listen to suggestions and I do read all of the comments that you leave. So yeah, we'll get right into the video without further ado. So when day trading US30, first of all, I do use the 4-hour for most of my analysis. So that is the time frame I am on. If I'm going to change it, I'll let you know. That's a common question that I get. In the last video, I don't know if you guys all watched it, but I do have another US30 video. I spoke about how I don't use zones for this index. And the reason being, I love zone to zone, you guys. Like, I love working with zones. However, due to the structure of the kind of market and the way the candles form with this particular index, you're going to get zones just are not the most appropriate way, in my opinion. Now, if you feel comfortable using them with this pair, by all means, you do that. However, in my opinion, because of all these news-related huge wicks, it throws off our zone and they don't end up being as accurate. So I like to use support and resistance lines with this pair. Now, that kind of leads me into my my first tip that I'm going to give you today when day trading US30, and that is to use, let me get my little pencil out here, dynamic support and resistance when day trading US30. Dynamic SNR. And basically all dynamic SNR lines are, support and resistance lines are, they're EMAs, okay, or moving averages. I like to use exponential moving averages, to each their own. Basically, the reason they're called dynamic just means that they're moving with price, okay? And really, like, I'm going to make this super, super simple today. I'm only using these two here. This is the 50 EMA, and this is my 200 EMA, okay? And you're going to notice that most EMAs over time will act as support and resistance lines, okay? But they're moving with price. And with a pair like US30 or with an index like US30, we're trending so strongly that dynamic support and resistance works really, really well, okay? Especially when we're day trading. So that's my first tip to you. Now, these are the two EMAs that I like to use. So it's the 50 EMA and the 200 EMA, and I'm going to show you how I use them. And if you guys have been watching me lately, you know that I've been loving the 200 EMA. And this is something new that I incorporated into my trading about, I want to say 6 months ago. And it's made a really, really big difference for me. So the 200 EMA is essentially just telling me my overall trend. Okay, so I can see that price has mainly been above it. We are above it right now. We're mainly in a bullish market. Okay, that's what that's telling me. And then the 50 EMA is going to give me some great day trading entry. All right, so I'm going to treat this right now as essentially a support line. So I'm going to zoom you right in. I know you guys asked me to do that. Okay, hopefully this looks good. And basically what I'm looking at here is we had a break, okay, of that. So what we're going to call it a support line right now, because that's what I'm using it as, or it would have been resistance here, right? Because we broke above it. So this here, we broke it as resistance. We came back down. We retested it as support. Of course, you know, it didn't retest perfectly at this point. And you're going to notice with US30, and this is why I don't use zones for this pair, that it really doesn't respect a line, a level, a pattern, all that well. You're going to often see these really big wicks, similar to gold, but I would say much worse than gold in terms of how long the wicks are. And this is why you want to really have a strong risk reward with US30, and you want to really give your trade some wiggle room, okay? We're going to get into how you can do that in a little bit. But basically here we retested it. And now, we're kind of things are just playing out at the moment. I like to trade the breakout on US30. I've mentioned that before. You don't often get a retest. You don't necessarily get a retest with US30, and news is going to disrupt that from happening a lot. So I like to catch the move at the breakout. So what I would do here, so at that breakout candle, okay, here's where I would have entered. I wouldn't actually enter on using this guy though. So I would go down to the 15-minute. I'm actually going to show you today how we could get an entry here, day trading this pair. Let me get rid of this as well. All right, now once we come over here, so I'll show you where I would have entered. So once we get a breakout, like a nice strong breakout, so let's just look at here because we did get a breakout here, right? I wouldn't enter until I saw a second long body candle. So we wouldn't actually have an entry there because we had like a rejection candle right after it. I wouldn't be looking to enter there. We never ended up getting much momentum. However, here, I probably could have entered. So we had a breakout there. It's not a strong breakout candle, but the next candle is bullish. So I would have entered here. This could have been a decent entry. And then what I normally do with a pair like US30 is trail my stop loss, okay? So when I'm entering using dynamic SNR, I usually am going to trail my stop loss. And that means that as we get up to like a new level, so a new support or resistance, I'm going to move my stop loss up every time. If the market's not trending strongly, which right now we can see it obviously is not, I'm most often going to get stopped out either at break even, so back down at my entry, near my entry, or with very little profit. But that's okay to me because the market's not always going to move in these huge, big, movements. You're not going to always get these great returns. It's better to protect your capital with a pair like this than to try and, get as much as you can from each trade. So just keep that in mind. Try not to lose a winning, like once a winning trade begins running into profit, especially with a pair like this that can move so fast, do try to trail your stop loss. That's just a suggestion, of course, and that's how I like to do it. My stop loss, by the way, we're going to get into where I would place that. So I'm going to show you how I would do that. So that's how I would do it. I would move my stop loss every time it gets to a new kind of support or resistance area. So in this case, I would have moved it to about, let's say like 28110 is where likely that would be. Okay. And then I would have got stopped out there. So a little bit of profit there. But when you're day trading, that's fine. You're not always going to get these huge movements. Okay. Now, sometimes what will happen, let's just look at an example where we would have got a really great risk reward because I can't make great examples happen, obviously. So like right here, for instance, had you taken the breakout, so looking at this candle here, we had 2 bullish candles in a row. Had we kept moving our stop loss, we could have gotten a really nice return, right? Because it just kept moving up. And often with US30, it just really depends on news and other fundamental factors. So going back to the 4-hour chart, so I'm moving back to the 4-hour chart. We're going to talk about where we place our stop loss now when we're day trading. So I like to use the ATR when placing my stop loss on US30. Okay. You may have heard me talk about the ATR before. I'm still going to show you in this video how I would do it though. So we're going to find the ATR, it's average true range. Basically what this indicator is telling you is the average range of each candle. Okay. And we never use it. I never personally use this to enter a trade, but it's a really, really great indicator because it's really just telling you how, on average, how far each candle is moving or how much each candle is moving. So basically it takes like the last 14 days and gives you an average of the candle open, close, or the low high. So it's a really, really great indicator. What I'm going to do next, so I'm going to look at, let's say our entry was here. Okay. Let's say we entered at the break of this 50 EMA here. And I want to know, where am I going to place my stop loss? So I'm going to come down to the ATR. I'm going to see what my value is. So right now it's telling me my value is 177. Can you guys see that over to the side? I'm going to circle it so you know where to look. Oops, I grabbed my Apple Pencil instead of my pencil for this. Let's see. Oh, okay. It was over here. So look over there. It's not letting me now. Yeah. So see over here, it says 177. And that was at our breakout. So there we go. It's still circled. That's where you're looking. So it's telling us at 177. So what we're going to do, we're going to take that value and we're going to grab our date and price range tool. Okay. And you guys can find that in the section with the arrows. It's the date and price range tool. We're going to go from our entry. So our entry would be a little bit above that line because on the 15-minute, we did wait for our confirmation candle. And we're going to go down 177. Now, here's the thing. It's not actually going to be 177 because, yeah, okay, right here. Let me go up. I'm going to zoom you guys in. And then I'm going to delete these lines. Bear with me for 1 second. It's not actually going to be 177 because we're not going to use, we're actually going to multiply it by 2. So let me just go back to using my pen for a second. So we're going to take the ATR value, which was 177, and I like to multiply it by 2. Now, here's the thing as well. It says 177, but you have to add a 0 on it because of the way that pips and points are calculated with US30. So that's a whole other topic. I know you guys ask me a lot about how pips are calculated with US30, and it's actually viewed in terms of points. Some people will still say pips, whatever. I don't really care what you call it. But yeah, it is measured differently. So you do have to add a 0. So it's actually going to be 1770 here. And an easy tip, because every pair is so different, and you might not know, like if you're doing this using the ATR value on, like, I don't know, another pair that say you don't know how they calculate pips. You don't know if you need to move your 0 or not, or how far. What I would do is just go to a 4-hour candle and measure it, right? So like here we're getting, okay, sorry, we have to add 2 zeros. And this is a good example. And this is a really great example because it's even reminding me right now. So we actually have to add 2 zeros, and you can tell because look at how big the number is, right? Like, obviously, we're not going to use 4 digits if it's 5 digits on one of the candle. That just wouldn't make sense because the ATR is telling you what the average candle is moving. So you're not going to have a candle that has 4 digits, right? If this is moving 5. Does that make sense to you guys? Like, if this is telling you there are 5 digits between the open and close of this candle, the high and the low of this candle, then obviously we're not going to use 4 here because that just wouldn't make sense with how far the market's moving. This is why the ATR works as a stop loss, because it's indicating to us, like, this is how far, like, this is how much movement is happening between your high and your low of your candle. So you need to be proactive and set your stop loss further away from, this high and low period, because that's how far they're moving on the 4-hour time frame. So yeah, that's just a good little tip. I always get confused with this one and gold. So yeah, I always have a look and do it this way. It just makes much more sense to me. So I'm going to drag this obviously down. And because we're multiplying it by 2, that's 354, which is going to end up being, remember, we're looking for 5 digits. So it's going to come down here. And this is going to lead me to our next 354. So 35. We want to get close to like 35400. That's close enough. I'm not going to sit here and, yeah, you guys can totally um, move it around until you find that. So this is using the 4-hour chart. Now, if you're using the 15-minute for entry, you should do the same thing I just did and go to the 15-minute chart. Okay. And I'll really, really quickly do that with you guys again too. But I did want to show it to you on the 4-hour. This is what I normally use. And another little trick is you can just place your stop loss below the 200 EMA. Okay. I'm showing you both ways, but that's another little trick. It's going to be really, really close. Now, because you're going to need a pretty wide stop loss, a pretty wide target in order for this to make sense. And you often will get it, even trailing your stop loss, like I told you to be proactive and do that. With this pair, I know this looks like a really wide stop, but it's really, really not. This pair moves so fast. Sometimes, like, look how long this candle is here. Like, you're going to get a lot of these candles, and you have to be able to withstand and place your stop loss properly. A big mistake I see from people is they use really they try to get these sniper entries on this pair or on US30, and that's really not going to help you much because the pair is so volatile, you'll just get stopped out a lot of the time. So just make sure you're calculating your risk and that your balance can withstand it, because even using a 0.01 lot size with this pair, if this is too much for your account size and you're risking more than 5% or whatever, don't take it. Like, that's just, yeah, don't trade US30 if you have an account size that small. So that's another tip. Now, if you're day trading, let's say you're like intraday trading, you want to be like in and out of the market, you can go down to the 15-minute chart. We can look at what our ATR is again here. So at this entry point, because this would have been our entry around here, and the ATR is 25. So it's not actually going to be 25. We're going to see now when we start placing this. Sorry, guys. I get sidetracked really easily. Okay, so what we're going to do now is say, all right, this is my entry. I'm thinking it's going to be 5 digits again, but let's just check. So let's take an average looking candle and go from the high to the low. Okay, so now we're looking at 4 digits, okay? And see what I did? Like, we can see the 4 digits there. So we know that's what we're going to use here, right? Instead of calculating it all the time, it doesn't need to be that deep. So what we're going to do is take this value now, okay, and say 25, so it's times 2, so it's about 5,000. So we're going to place it around 5,000, which would be about here. So on the 15-minute chart, this is where I would place it. If you're just looking for, you want to be in and out of the market, in that case, you might have even taken profit here and be out of the trade. If you're just in and out of the market, that's how you can do that. Or again, if you want to, you can just place it below the 200 EMA. So this is going to give you usually going to give you a wider stop loss, but you can do it that way if you find the ATR value or the ATR method too much. Some people don't like it. I find it's great, especially for a pair like this. The last tip I want to give you, I know this is getting a little bit long, you guys, and I apologize for that. But the last tip I do want to give you when it comes to day trading US30 or even trading US30, because I didn't mention this in my first video, is to look at divergence. Keep an eye on divergence, okay? Because right now, technically, so we've had a break of this. We did have a break of this 50 EMA. Actually, let's go back to the 4-hour chart. Okay, I'm back on the 4-hour chart now. I'm going to straighten this up so we can see. So even though we did have a break of the 50 EMA and we do appear to still be in that bullish trend, something to keep an eye on is always look at divergence. Now, the way I like to use divergence specifically on this pair, I plot my RSI. Relative strength index, there it is. So I plot my RSI. I don't change the settings of the RSI at all. I know some people will ask me that. And I'm going to look to see if I have any hidden divergence, okay? Hidden divergence. That is what I like to use on on indexes, Keep messing up my words here today. I like to use hidden divergences because they give us an indication that we're going to see a continuation. And when we trade pairs or indices that tend to trend really strongly, hidden divergence is great because it's telling you when you have a continuation. And that's going to give you really good confirmation of a breakout. So this is definitely my favorite type of divergence for this pair. And now if we look right now, we do actually have some hidden divergence going on because we can see here that price is creating lower highs, right? We have lower high. So here's our, sorry, I shouldn't have put lower high. Here's our high, and this high is lower. Now on the RSI at the exact same point, okay, if you were to come down, we see this is the exact same point. We are creating, or the RSI, the indicator, is creating higher highs. This is the high here, and this is a higher high. This is indicating to me that there's a chance we could see a continuation downward because this type of divergence is actually considered bearish, okay? So, because this is contrasting what we just looked at, we did have a breakout here. All I would simply do here is not enter the trade. I would not enter a trade given this divergence. What I would do is wait and see if our 200 EMA, which is again this guy here, gets broken, and then we could have a potential breakout opportunity, a bearish breakout opportunity of the 200 EMA, which is actually much stronger. We'll see which way, our 50 EMA, or which we'll see if we get a strong breakout of the 50 EMA as well. But I would wait for that 200 EMA to be broken because that's our higher time frame trend. Meaning that it's more accurate on the higher time frames. That's all I mean by that. When you switch to like the daily, the weekly, it's really going to give you a nice indication of your higher time frame trend. So this is the one that would be of most interest to me. I'd want to see a break below that, and you could try to get into a good sell opportunity there. Okay, so we could have a change in direction. We've had this little shift upward, but we could have a change in direction now. So I wouldn't be buying with this hidden divergence, this bearish hidden divergence. So just keep an eye on divergence. And sometimes what this will do is, because this divergence is acting as a really strong confluence or confirmation, okay? Sometimes this will tell you, when everything else is pointing upward, which is what's happening now. We've broken above the 50. We're still above the 200. It'll tell you, it'll confirm this direction. And that would be best, obviously, because right now things are a little bit conflicting. That's just the nature of the market, you guys. It's why we have to be smart and always wait for confirmations and never be too eager to get in, even as a day trader. Like, wait for the proper setups to come to you. So I think that's it. I know I went on a long time. If I took too long in this video, please let me know because I'll try to make them quicker. Hopefully you guys enjoyed this, and I'll see you guys in tomorrow's video.